Hey guys, JDen is going to be launched and previewing on the 28th of October. Launch day 11 November. So let's dive right into it. This is the overall facade of JDen. For those of you who haven't seen the show flat, or rather most of you who wouldn't have seen the show flat lah. So there will be some agents, or rather quite a lot of agents that went to the show flat. I've seen the show flat. It's pretty decent. Although the scale model is quite interesting. There are quite some. I'm more amazed by this. Some. I'm not gonna spoil the surprise. Okay, it's just something to do with the facilities. The way they do it is. There's some fancy toys that fascinated me more than the actually entire show for it, because it's something new and interesting. So well, you'll find out once you're there. Anyway, for those of you who are not very familiar with Jurong East, then JDen is built on the original J Cube, which I don't think a lot of people know anyway, for those people who don't stay in the West. But the main shopping centers would be your Westgate, Gem, and then there's quite some in the office and quite a lot of shopping options, and also your General Hospital, Ng Teng Fong one over there. There's gonna be quite happening over there. After all, it's still the second CBD of Singapore. 2 lines, and then upcoming one more. That's why a lot of people think Jurong is Niao Busentan. I agree Jurong is Niao Busentan. I used to study at NTU. I still feel it's Niao Busentan after spending 4 years in even more west of that area. But it is a very convenient place for those people who are around there or grew up there. And people who grew up there, a lot of them tend to want to continue staying there. Of course, there will be some people who are tired of sticking to one end of Singapore. They want to move on to the central part of Singapore, but there will still be people who still want to stay near to their families. That's why you have all kinds of preferences. You have people who, I've seen people who were in the northeast move all the way to the west, people in the west move to the central, people in the east move all the way to the west because they feel that the east is too cluttered. I personally wouldn't. I don't like staying in the east because I think I personally feel it's too cluttered. I've been more of a central kind of guy, not the central as in the south CBD area kind of central. I've been like central, literary center of Singapore kind of guy all my life. But I don't mind with moving places. I follow where the opportunity goes. After all, I practice what I preach, right? So this is the location of JDen. And you can see there are not many competitors in terms of private housing in that area. I think this is J Gateway, Ivory Heights, which is original, or rather still is a HUDC, and then Westmere, a much smaller condo. If I'm not wrong, I think it's a EC. If I'm not wrong, okay, those are the ones, only ones within the 1 km radius. We'll touch a little bit more on that. Then this one is the easier version for you to digest. I'm not going to talk too much about it. After all, we are not going to be looking specifically at product stuff, right? So this is the original J Cube. Well, I still remember the days that spending all the memories there, going all the skating, ice skating, whatever. Just kidding. I haven't been ice skate before, so I don't have much memories there. But it does feel sad for people who have frequent that place. I've only been that place only twice or 3 times. I don't think I've really been very familiar with that place. What I know is like this place is rather new to me, and the next thing I know, it's been torn down. So things really happen very fast over at Jurong. But of course, like I said before, a lot of people they totally close off the idea of they don't like a particular part of Singapore. They just totally shut it off, but they don't see that certain things are happening there. But it's okay because true investors will really open up their eyes and be open to opportunities, right? After all, opportunities will only go to people who actually look for it rather than people who choose to turn a blind eye to it. These are the facilities. I kind of like this lazy river, which is part of the feature that I mentioned just now. Quite interesting. It reminds me a little bit more of, what do you call it? Wild Wet. I think was it Wild Wet? I remember there was something like a lazy river kind of thing, right? And so I kind of like sitting in the float and just drifting along Yeah, that's pretty much how we go through life, right? No, exactly. Not really. I'm just kidding. I don't think I actually drift through life that, but I've seen people who actually drift through life more. Although I would love to drift through life, but life is a little bit too short to drift through. And these are pretty basic, I would say, other than the Resale lever, which is a little bit more interesting. These are some of the fact sheets. Land area is this, and then the build up. Residential units is about 300 plus, which is quite okay. 80% parking lots, which shouldn't be a problem because there are going to be quite some tenants in the area, and MRT, shopping mall, everything all within there. Naturally, I will feel most of the tenants probably won't be even driving. That's why it should be more than enough. And there's quite a lot of bicycle lots. Obviously it's by CapitaLand, so as usual I'm not going to talk too much about developers because it's not that I don't want to offend them, it's like it's not fair because sometimes it's also based a lot on some certain developers. They can have very good reputation, but sometimes they can screw up project, and sometimes people who have don't really very good reputation, they end up building a project that is so bloody nice. It's like, wow, you don't expect this kind of quality from this developer. That's why I don't really focus too much on which developer it is. Of course, some people really like, wow, this one is built by this developer, I'm not going to even consider. Then I'm sorry, you're a little bit too myopic in my eyes, because you are going to close yourself off to a lot of opportunities. And after all, we have seen quite a lot of examples of developments that are pretty much poorly built, but they reap quite a lot of profits. That's why unless your aim is just to buy and settle down into somewhere that has probably very little to no problems, and like I said, even the best developers, you cannot guarantee that there's no problems. So to me, it's a gamble. I'd rather go for something that has good growth potential, that at least I have options in the future. If not, then you buy whatever it is, or rather what you think it is, and then end up you get stuck. I don't think that is going to be a very, very wise choice. I personally wouldn't want to be caught in that situation, and I wouldn't advise my clients to be either. Anyway, let's look at the residential unit mix. There are quite a lot of 2 and 3 bedders. I would say most of the concentrations are within the 2 to 3 bedders. There are some 1 plus 30, and they are of not too Mickey Mouse size. Last time it used to be 400 plus square feet. And if you factor in the expected PSF, which later we'll talk about it in a short while, that means the quantum is not going to be too small. And as such, a lot of people will be thinking, why are we paying this kind of price for Jurong? Like I mentioned, if you just close your eyes to just because your own personal bias point of view for certain locations of Singapore, then likely you're gonna see opportunities. I'm not saying that this is a very good opportunity, JDen, but sometimes we have to be a little bit objective and look further in before we make a decision. Okay, now as I mentioned, I haven't even gone into the pricing side before you start thinking, hey, is he trying to push through, JDen? No, I'm not. I haven't even gone to the main part yet. Okay, 1 km radius, we have supposedly only 3 projects, residential projects, and you can see the average PSF is a lot of difference. It's almost twice the difference for J Gateway and the other two, mainly because of the age. I don't think it's the land size of development for sure, because this guy is gonna throw all of them down due to the sheer size of it. It's huge. It's mega huge. It's even bigger than, I think, the not so nearby Park Clementi's, if I'm not wrong. I think it's even bigger than that. Although the land shape is quite a lot different as well. But within 1 km radius, you only have 1,600 plus units, which is pretty undersupplied in this area, considering how it is a second CBD, supposedly. Like I mentioned, supposedly, I don't label it a second CBD myself. The government labels it, so I just follow accordingly. Okay, since it's supposedly the second CBD, then only 1,600 plus, naturally there will be demand, and probably explains why J Gateway was pretty a successful product in its own right. And within 1 km radius, these are the primary schools. These are the primary and secondary schools within the 2 km radius. Not going to talk too much about schools. Like I mentioned in other videos before, I don't think the schools are really the make or break factors. They are just some of the factors, but they are not the deal breakers or what makes a development profitable or unprofitable. And these are the unit distributions. And facilities, as usual, I'm not going to talk too much about them, but you can see roughly the land size is not exactly very big. That's why you don't have access to like super vast, diverse landscaping. But it's still quite decent, I think, for the size. I think probably much better than some of the other developments that are of similar size, but I don't think their landscaping was even done as well. Maintenance fees, I don't think is on the low side at all. This is apparently becoming quite a norm for 1 and 2 bidders to be hitting 400 plus. And keep in mind, whatever they put here or put in the 4-4 that you'll be receiving at a show flat. Next time when you take TOP, you take keys, these maintenance fees may be subject to changes. So don't be hard up on, today they tell us $400 flat, it means $400 flat. And if I'm not wrong, this is not even inclusive of GST. And the point, who knows what GST is going to increase. Maybe it's going to be 10%, 11%. Things are always changing. And we have some developments really increasing quite a lot in recent TOP projects. And it'll be up to whether developers, how well they manage these causes. If not, they will incur quite a wrath or in the residents committee, which is not going to do very well for the resale market. That's why I think it's best to settle everything behind the scenes. Okay, these are the floor plan. I'm not going to talk too much about it, but there's quite a lot of dumbbell layouts, which I personally, prefer. But the funny thing is, quite some people don't like the dumbbell layout, which I feel is quite funny, because they don't like the, like some, apparently I heard some people don't like, or, facing the other room. I'm not sure whether is it for feng shui reason or they just don't like seeing their family. But if you got problem looking at your family, then I think there is really some problem. But I think this is a very efficient use of space, and I personally feel that more developers should use this rather than the long crazy corridors, which is paying out valuable space for space that you cannot use, almost cannot use. I've seen some people park like cabinets along the corridor, which I think is a terrible idea. But I mean, since they pay for a space, who has the right to tell them not to do that, right? But this is quite a nice layout for the 2 bidders. 3 bidders is a little bit more. When it comes to the corridor, it's still quite a long corridor although they design it in such a way that it's not like like this, then other towards at the end, so it's an ultra long corridor. But they're still trying to cut it down. But it's still, if you think about it, this is still quite a long corridor. This is still quite a long corridor. If you add this, it's still quite a sizable one. Like example this. So I wouldn't say this is a bad layout. I would say this is quite a standard layout in today's market. Okay, definitely there are better ones, but I'm not going to be talking about that. Like I mentioned before, there are a lot of developments that I've seen that has way shittier layouts, way shittier features, like bay windows, planters, not things that are not exactly usable, but they are making truckload of profits, like really a lot more. So if somebody ever tells you that, layout is going to be super important, maybe if you're buying for own stay, but if you're buying for investment, I really don't think so. It's all about the price. It's all about the macro factors. If your macro factors are strong, then it is very hard for your layout to sabotage your whole development. Okay, if you do a research. So I'm not going to be explaining that more. The focus is still going to be on JDen. Then over here, 1 km radius is within this brown line. There's a little bit more. I think it's Park Oasis and some, I can't remember. Yeah, the Mayfair. Some 2 very older condos within that area, just slightly out of the 1 km radius. Let's pull them out for a little bit of comparison. Ivory Heights is a little bit more interesting. 100 years instead of the 99 years. After all, last time it was the HUDC. I think they somehow they put it as a condo over here. Please correct me if I'm wrong. If I mentioned that it's a HUDC, because I remember seeing it somewhere that they were trying to go for a block, but they failed a few years back. I'm not sure whether they are trying again, but I don't think the market today is a very good market for a block. You see the chart, most of the other 99 years or 100 years in this sense, they are like, this is like almost my age, man. Westmere is an EC. So this is about 27 years old, and this is like 30 something years already, 27 years, and this is even older than me. And they are all trading about the same levels, slightly above 1000 PSF. And so you can see more or less they are merging at this point. They've pretty much been flat lah. They have increased, yes, I agree, they have increased. Some of them made money, but if you are talking about the certainty of amount, the certainty amount that they are making, the profit that they are making, there, I don't think it's a very very safe point for them to exit. Especially after considering how all these older condos, people like to splash a lot of money on renovations. They hack every single damn thing. Especially the larger the condo, the more they spend. People are spending easily $100,000 to $200,000 on renovations, easily or more, for like 1,000 plus to less than 1,005 square feet kind of the houses, and they expect people to be paying for that. Which I find is quite, I don't laughable, because that is your taste, right? And you expect the other buyer to accept your taste at the original price. It's like today, if you buy a brand new car at $300,000, which I think is very common nowadays, unfortunately, and you're expecting people to buy over your car at $300,000, despite you putting the Hello Kitties and the I don't know what else, what other drawings are there, Hello Kitties and Powerpuff Girls or whatever drawings inside the car, and then you expect people to pay 300K for it after using it for 10 years. I don't know how the logic is that, but some people, some owners are like that. I mean, everyone, when they want to sell the house, most of them are home proud, I understand. Not all. Some are very logical. They understand that, oh yeah, my renovations have depreciation, so I'm willing to just let go at market price, which I think is fine. And of course, this kind I will try to push. But sometimes sellers get a little bit overboard, then they want more, and they expect maybe they get today at this price, then they splash up the renovations. Since I mentioned, right, 200 plus thousand, it can be easy 200 plus PSF, right? That means they want today to sell at this price, when others are selling at this price. So what are the chances, especially given the eroding lease over here, as we mentioned? Then J Gateway, a much younger condo with a much younger lease, like at least 16 years compared to Westmere. And this is how many years? This is like 14 plus 26 years younger lease. And naturally you realize that people are willing to pay for newer developments and newer buildings, because after all, if I look at the pool and I don't even feel like swimming in, why would I want to pay big bucks for it, right? But there are still people who are willing to pay because of the size. But how many of them is the question. That's why you see usually resale volumes for older houses tend to be not as high as the newer ones. Even the newer ones are like what the older generation says, exorbitantly high, which we all know lah. I think let's be honest, we all know lah. The new launches, the PSF has always been going higher, and that's for a very good reason. It's because of land, it's because of material causes, and a lot of other things, inflation, everything. But whereas your buildings can depreciate, your renovations can depreciate, your facilities can erode and wear and tear. And that's why all these, it will be very hard for them to catch up, and eventually this will also reach the same stage. You cannot keep climbing on at this level. So back to this, provided J Gateway is transacting at this level, given that it's completed back in 2016, likely JDen is going to be completed 2027, 2028. That means it's going to be 12 years younger. Will it be reasonable to expect JDen to be launching at 2000? Even I tell you people, you won't believe it, but if I tell people that JDen is going to launch at 2000 flat PSF, there will be people who go key xiao. Well, I tell you, if they launch at 2000 PSF, the development will be swept to almost 100% swept. But it's not going to happen. It's definitely not going to happen. We know. I know the developer strategy. I know the developers their tendency, how they price, and they know that this guy who is much older is already transacting at this price, and they know that Lake Garden is transacting higher. Why would they want to sell you at 2000 PSF? Are they doing the charity or what? Of course, they get on land a lot cheaper. That is not for us. We don't have the exact figures for that, but they know the market price is going to be way higher, and they will be selling you at a market price because they are not in an urgent state to sell. They have a lot of time, they have a lot of runway to sell going ahead, and why bother to clear out at the fire sale price, right? J Gateway is you can see over here, despite being a 鸟不生蛋 kind of location, the kind of shitty location compared to, for most people. I'm sorry to people who mention who stay in near the area. I'm not saying your location is shitty. I'm saying from a lot of other people's perspective. I personally don't stay there, but it doesn't mean that I feel it's a shit location. I feel that if you stay there, there's a lot of accessibility. There's a lot of amenities over there. There's a lot of transport. We even have a hospital within walking distance. Like, come on, how many places have all these things within walking distance, right? I'm not saying that hospital being within walking distance is a good thing, but well, you still, I mean, if you have it next time when you're old, you will want that actually. Unfortunately, like I said, but look at the amount of profits, and the amount of transactions that are profitable versus the amount of the transactions that are unprofitable. What is the ratio? I mean, if you're telling me that I'm gunning for $1 million, okay, maybe not. But if I know I'm going for a high win-lose ratio, then I would definitely go for something like this. And it was wise of all these owners at that point. Last time when TDASR came in, the whole market crashed, and then people were still buying this at this kind of location, and they were duly rewarded. I feel that these guys, they really deserve it, because hats off to them. They took the leap of faith. They jumped in when everybody had a lot of fear, a lot of doubts, and then they managed to cash out at this kind of profit margin. And these are monies that can be rather life changing for a lot of middle class people. I'm not saying the high end, high income people. Middle class can be rather life changing. So a lot of people say, transport, I cannot afford a car, that's why I need to be convenient. I don't want to stay like Ulu Jurong. How many cars can you buy with this, man? I'm not going to say much more. So estimated price metrics, all these are estimates. To emphasize again, these are estimates. Developer has not really officially released the price, but this is pretty much what we expect. Although the smaller ones, I don't think we are going to be expecting them to be launching at this range. Come on lah. They know they have the leeway. They know a lot of people are waiting with the kind of quantum to enter. These will be swept up easily. So I think expected they'll be launching at this. You'll be thinking 2006 to even 2006, 2007 for high floor. I think it's possible. But there will be people who eventually will accept. Whether they will accept on the launch day, I have no idea. And I don't need to know. We will find out in due time. But eventually, I think people will be accepting. And you'll be thinking that it's madness. Yes, I agree, it can be madness. But a lot of things are driving the prices of properties. The new ECs upcoming are going to be easily 1,500 plus. Ultra EC has really broken the 1,500 PSF barrier for new development. So what's more going to be surprising, right, for EC, especially in this kind of location, the second CBD with all this accessibility, which people love to pay for. Developers know that you love to pay for this. They will gladly charge you for this. Then this other range, so that's why I think overall, I think you more or less can forget about them launching at this, even for the large units. I personally feel that the large units, these two, they will probably be launching around here. So most of them will be probably launching like one bracket above. And that means they're going to be maybe average 2004 to 2005 around there, which is quite shocking to most people, but I think that is pretty much expected and quite acceptable. I'm not saying that I will buy there, but I think if you comparatively, objectively speaking, if people are willing to pay 2001, 2002 for Lake Garden, why wouldn't people be willing to pay 2004, 2005 for JDen, right? JDen, yeah. Sorry, I still tend to get confused. But why wouldn't people pay 2004 to 2006 even for something that is much more convenient? Singaporeans love to pay for convenience. I have no idea why. I don't understand, and I hope I don't understand, because it keeps me objective. But yeah, Singaporeans love to pay for that. So, like I mentioned, Singapore loves Singaporeans, and even PRs, they love to pay for this. We will definitely likely will have some foreigners, even with the 60% ABSD, they may still buy. But it's going to be very tiny percentage. But mostly Singaporeans and PR, they love all these things around them. And like I said, developers know you love it, and they will gladly charge you for it, and they will butcher you. Okay, especially the higher nice view floors, which is totally expected. But well, the cycle remains. The cycle always repeats itself, because there will be people who are super emotional. They go into a showroom. I'm gonna be objective. I want to buy. I want to find out only. They end up wow this that. They end up I feel I deserve this after all this hard work, and then they get butchered. Okay. So if we look at 2004 plus 2005, that means it's going to be around this range. Okay, the bigger units probably a little bit more towards the bottom, but I would say the main bulk of the units should be around this range compared to the older resales. And it has to, because imagine a new one, brand new, having, or rather being sold at a lower price in this kind of market. After we're still kind of in a seller's market, we are transitioning, yes, to a buyer's market, but it's not going to be like a super huge buyer's market, because supply of new launches is really not that high as how many years ago was that? That was like 3 years ago, when we have like 30 plus thousand stocks. Now we only have like barely 10 plus thousand stocks. Developers still have the leeway, and they still have a lot of time, so it will be reasonable, or rather expected, for them to be pricing around this range, which will provide quite some premium over the nearby J Gateway, which is a resale, is likely going to be 11 to 12 years younger. And then you see this big gap over here, over the old ones, after all, eroding list, older buildings, and then all these factors coming in together. I really don't think this gap is going to close this, and I don't think they are going to be launching this for sure. Now we pull in the developments that are newer, completed in the past few years, and other than this guy over here, which we just mentioned. J Gateway is the nearest competitor, but much older at that point when JDen is going to be done. This is only completed last year. This is going to be completed hopefully by this year due to some delays, and this one completed just 4 years back. And you realize that the ones that are completed are this quarter coming down. Okay, let's not repeat the factors again, but yeah, it's kind of expected. At this point, we have all these macro factors, but well, we'll see anyway. But you realize that this one is a funny thing. This one has no MRT. The purple one, which you mentioned just now, has no MRT. No interchange, no more, nothing. Far away from MRT. I think if you walk to MRT, you're quite a hero. And it's gonna be like 1 km. I can't remember the walking distance, but I don't think it is exactly walking distance. And most people in their right minds would be walking, especially in the hot noon sun. But yep, this one is going up, but the rates are coming down. Interestingly, okay. And if they launch at this price for JDen, I think it is only expected, given this one take, and this one take, everything also take, even hospital also take, then I think developers will expect to command that premium, and they will expect that people will be very willing to pay for it. Okay, you'll be surprised. Let's see how the spread turns out on the launch, or rather at the preview. You'll be, in case you're wondering, or it's going to be super highly demand, and that's why I should rush in. Also keep in mind that there's going to be this Jurong Lake District thing that's going to be coming up, going to be awarded to some master developer thing, which I'm not going to be talking too much about today. But yeah, basically a master developer has the power to oversee the whole development of this place. But it's still quite a interesting concept. A lot of things are still very unclear, but it's very likely going to have quite a lot of supply coming up also. That's why JDen is not going to be the only one. That's why you have to be a lot more careful when it comes to getting in to this development. I think you have to do a lot more due diligence. It's not just because of low supply and then you just pay whatever it is, even though you have all these facilities at your doorstep. Okay, I'm not even sure whether it's sheltered. I think maybe even it's sheltered all the way. I'm not very clear, but anyway, it doesn't really matter on a macro perspective. Then also keep in mind there are a lot of other GLS that are being launched and awarded in recent months. Upcoming, these are the few. Yeah, how much are they going to be launched? And then they also have to compare with JDen and also this big guy over here. Not even sure whether there's going to be any big scale developer that are willing to take on this mammoth task, man. This is a huge task. I can't even, I'm sorry, my tiny mind cannot comprehend the master developer. These are for the real experts in the development field. Okay, I'm more interested. I'm more content and happy being a researcher rather than being a designer. All this, there's too many concerns and too many factors to factor. It's like, wow, you still have to factor in this guy's preference. You got to factor in this one. You got to take in the inputs. You got to change this and that. Like, wow, a lot of things just cannot be done then. So yeah, you have to compare with all this and decide at that point which one seems to be a lot more better to you. Especially most of us only have one chance. You have to be very, very, very careful about what you buy in, because once you buy in, you are minimally locked in for 3 years unless you're very willing to pay stamp duty, which our government will happily take from you. We'll hopefully we will thank you for nation building in advance. But yep, verdict, it's very hard for us to say as usual. I wouldn't like to give a rating, because unless they really launch a 2000 PSF, which like I said is almost impossible, or rather impossible, then you'll be, oh, wow, 1010. But well, it really depends on the price at that point. You gotta be a lot more sharp. You gotta be a lot more diligent into your research and very, very reactive on the day itself, because they are not going to be telling you the exact pricing. They can give you an indicative, but the indicative tend to be the lower end. It's like the worst facing units somewhere. Some of them, if they're nicer, they give you the mid-range, but very rare. They want you to be, having all the FOMO effect, queuing up there, and then stress you into making a decision eventually. And this is what all these developer sales is about, right? So it really depends on how much the price is going to be. But I think, like I said, I expect 2004 plus 2005 average PSF is going to be not unexpectable. Most important thing is, remember, stay open-minded. Just because you shut off Jurong, okay, if you want to shut off, nobody's stopping you lah. But I'm not saying you should really look at JDen, but be open to new opportunities. I personally think there are way better opportunities out there. There are still a lot of opportunities out there. It's just whether you choose to open your eyes and then look past the macroeconomic factors such as interest rates. A lot of people are very concerned about interest rates right now. They claim that interest rate so high, I shouldn't be buying. Then you want to wait for interest rate to be low, and then when other people start buying, and then you buy, you follow the herd mentality. Well, let's just remember, only a smaller proportion of people tend to make it bigger in life, and they tend to be not the ones that follow the crowd. The ones that follow the crowd tend to be what we call average as usual. And so unless you want to be part of the working class throughout your whole life and lead an unsecure retirement, then I don't think this is what somebody who wants to achieve a secure, comfortable retirement should be thinking. Their mentality shouldn't be that way. Your mentality should always be open-minded. Look at things the way it actually is rather than what they seem to be. Okay, just another example. Previously, this development, you can see for yourself lah. Previously, remember, it was on supposedly fire sale, bank sale, mortgage sale, whatever you call it, and then people were rushing in like big hoo-ha. 1000 PSF is like the biggest deal here and there, and then today it's still selling at this price. So I even had one viewer come argue with me. I'm like, I can't be bothered, man. It's like, just wait, this is my face when I see this. So imagine this guy, everyone else getting it at this price, and this guy getting in at 4,000 plus. I think this one is a semi-D, right? Or the corner terrace is bigger. After all, this one is a leasehold, and it's reversible reversionary lease is going back to the ultimate landowner. I'm not gonna be saying again who is it gonna be. But this one bought at 4.2 at this size, and this one bought about the same size, slightly bigger at much cheaper rate. And today this one is not gonna be much different as well. It's a little bit, it's quite some 200, is it 200 or less than 200, 150 square feet smaller land, which is not too significant, but it's almost same price. Isn't this actually more fire sale? I'm not saying this is a super fire sale, but it is more fire sale than this supposed fire sale. So these guys who got in, maybe this will be like their face probably like the cat here lah. So like I said, please keep your eyes open, or rather open in the right direction. Don't follow the herd mentality just because other people are rushing in, going for certain supposedly opportunities. Especially if you are looking at things from a logical point of view, we are looking at being a logical investor. You have to block out the herd mentality and really think, why are we doing this particular why are we having this particular action? Okay, that is all we have for today. So make sure if you like this video, if you find it's helpful, make sure you like, share, subscribe, and then we'll see how we can help you when it comes to your property decision. Okay, see you guys. Bye bye.